welcome back. This is the Blind Market Watcher, and I'm following up on a series um, market predictions as well as breakdown of some of the different sectors that we're going to explore. In the last couple videos, we made predictions along the airline sector, so I'd like to follow up with Delta Airline, since they had an analyst investor day back in June. I believe it's June 27th. And I apologize for not following up with a video earlier, but well, I'm new to this, and in any case, better late than never. So I had a prediction prior to that analyst day, and I mentioned that there was a chance that Delta would raise their guidance, and indeed they did. On June 27th, they raised their guidance to the top end of their guidance for EPS and revenue, I believe, or for revenue and in any case, I wanted to discuss a few takeaways that was talked that I got from the analyst day, and basically I want to go over them with you to some level. But before I go, I want to make sure that I do a disclaimer. I'm not a professional, financial professional, and I do not intend to give any financial advice. This is basically my viewpoint, and this is basically my understanding of the market and the sector, and some of the information I provide may not be completely accurate or needs to be clarified. So I just want to make sure that you recognize that, and please be cautious with these predictions and information that I'm about to share, and assess your own risks. And for financial advice, please contact your financial professional for advice. With that, let's start with some prediction. And Delta is about to release their Q2 earnings in a couple of days. We're recording on Tuesday, and they're releasing on Thursday. So again, I like to start off with a little prediction before I go into the takeaway from the analyst day. I predict that they are going to they have a pretty good chance of raising their full year guidance to instead of $5 to $6, I think they might raise it to $6 to $7. And if they don't do it this in Q2, they'll probably do it in October. I think with the strong demand and the strong demand and the health of the business, I think that's it's a pretty good prediction on my side. In any case, but again, it's a prediction. So let's see if I'm right. So that said, here's a couple other predictions. I predict that their Q2 revenue will be in the neighborhood of 16 to 16.2 billion, and that's represent a a substantial increase from the 2019 level. That said, one should take this and be cautious with it, because it does include some of their stepped up refinery business. No doubt that there's some of that performance is because of the strong demand and pricing environment. But I would say that the fuel costs and the refinery business do add to that, do allow them to achieve that level of revenue performance. And also its recovery, they probably added back, in the mid-teens level of capacity, and a lot of those capacity are international. And so with international, there's a the revenue from that tends to be generally a little higher. So in any case, you can look at their income statement for further details. I'm just basically giving you some very high level takeaways. So from their takeaway that I received, um, demand is very, very strong. In fact, there are some days they've noted that the load factors have been reaching into the 98, 99 percentile. And in fact, they mentioned something about closing out Q2 with a 95% load factor. Why is that important? That's important because they actually raised capacity in the mid-teens, let's say 15 to 17%. Um, I don't know exactly where the actual capacity is, but it's something north of 15%. And so if you raise capacity that amount, your unit revenue should typically be under pressure and should be lower. But in this case, they actually said that the unit revenue is actually positive. So only two things could explain that positive unit revenue, in my opinion. I'm sure some of your financial professionals can explore in more detail, but I think that the one that's responsible for that would be the load factor. The load factor jumped from in the high 80s to the mid 90s, and so that's a huge jump in terms of, and load factor is how full your airplanes are. And so you can see you don't have to add additional flights. You're just filling up the empty seats that were, basically the empty seats. And so you're getting incremental revenue at very little incremental costs. So that's one way that allowed them to have a positive unit revenue when they're actually adding capacity. So the other reason is the pricing of international. I think the international airfares are quite high, and especially transatlantic and transpacific. I think there are an upwards, north of 20% increases over last year and substantially over 2019. I don't know what the number is, but I've read somewhere in Hopper that it's north of 50% compared to 2019 level for certain international markets. But again, be cautious with data. Data is always, depends. As we all know, it's pretty much as reliable as how much we do the verification. So you should verify that yourself. But in any case, they did mention that they would have positive unit revenue, and that is actually in contrast to somebody like a budget carrier like Southwest, who is supposedly facing significant negative unit revenue performance. So and Southwest also increased the capacity, but in increasing their capacity, they face negative unit revenue, while Delta is actually getting positive unit revenue. And so that tells you the tales of two airlines. One has very little international exposure, and one has a much broader international exposure. And I think that is really it's really one of the key difference. And there are other differences as well. Delta does have a lot of other segments that Southwest does not, and so that allows them to really drive that unit revenue up, whereas Southwest has pressure. For example, Delta has a larger loyalty program than Southwest, and that loyalty program is significantly larger than it was pre-pandemic, and significantly larger than it was a decade or two ago. And so the nature of Delta's business has significantly changed from a decade ago. In fact, Delta mentioned that their remuneration from the American Express loyalty program, a partnership, is something like close approaching 7 billion mark this year, and should go north of 7 billion in 2024-ish or something like that. This is huge. Just to give you perspective, this, if you compare this to their income in 2019, this is a number that is larger than their income in 2019. But again, this is remuneration. And then they go, one of the takeaway that I got from this analyst day is that um, their relationship with American Express generates something like 1% of GDP on the American Express card. And so, I mean, that is just astounding. 1% of of U.S. GDP goes on to the Delta American Express card. I think that this trend is continuing to accelerate, and there's just I see very little things stopping it. But this is my viewpoint, and it's a point that that investor needs to pay close attention to, and not just looking at ticket sales. So that's a few other takeaways from this analyst day is that the balance sheet remains strong. They are still on track to pay down a significant amount of debt, and so that they will be lowering their leverage. And in fact, I believe they are somewhere at or below their leverage in 2019, or approaching that. You're going to have to look that up. And there's a lot of pieces of information, and so that's something that you need to verify. But they did talked about their strong balance sheets. Another takeaway is their premium business is growing, and it's grown much larger than it was in pre-pandemic. And so today, what they talk about in the main cabin, a huge chunk of their seats are premium as compared to 2019. And so that's one way that they can drive incremental revenue, is by having more of these premium seats. They didn't mention that business travel hasn't fully recovered, but from the surveys that they've taken, that business is survey that they've taken, as well as industry survey, shows that business will continue to recover throughout this year, and into next year. But we'll have to wait and see on that. And they did mention that they did not build this into their guidance, and so this would be definitely upside. But how much, I don't have visibility to their calculations, so I'll have to take their word for that. And then they also forecasted that margin is strong. In fact, they had guided margin to be in the 14 to 16%, and I believe, this is my prediction, but I believe that the margin will be at the high end of it, so something north of 16%. This is, I don't know what 2019 was, but I would say this is relatively comparable to 2019, if not greater. But again, this is a prediction, and we'll see, when they do release their earnings, if I'm right. But based on their positive unit revenue, I would think that they would hit on the high end of the margin. So that's definitely another takeaway that they pointed out too. And to contrast this with like 2022, the margin was significantly lower than this, and so this is really good news for the industry, well, at least for Delta. So another takeaway that they talk about is their upgauging efforts, and they, you may know this or you may not, but Delta has aggressively been upgauging their fleet in the past years. And so upgauging is basically to add more seats to existing planes, and so every time they change out they retire an older model and they replace it with a newer model, they experience something like a double-digit incremental margin increase. And so if you can just imagine, the newer planes are either more fuel efficient, roomier, or have more seats. For whatever reason, they are able to generate additional incremental revenue. And so I think the number was something like for narrow body jets, the increase is like 10%, and for wide body it's something like 12% or vice versa. I forget the two, but either way, it's approaching something like double-digit incremental margin on those upgauging efforts. And so, Delta has a lot of these advantages over their competitor, and so they've effectively created sort of a moat. And this is true to some extent. They've invested heavily on different aspects of their business, and so it is going to be difficult for the competitor to catch up. But the competitors, I don't believe the competitors are that far behind. But that I do recognize that Delta does have an advantage, and it does reflect in their share prices. Their stock prices have been climbing in recent weeks, and so I don't advocate going out there and picking up their shares without really assessing the risk properly. But if you do the math according to the guidance of 5 to 6, and if they bump that up to 6 and 7 as I predict, and they did mention they'll go north of 7 in 24, or really good chance of doing that. Hypothetically, we take a 7 PE for this year on the high end as I predict, and you multiply it by a 10 multiple PE, you get $70 share price. So you can get an idea of some of the opportunities where it can go. I'm not saying that they'll receive a 10 PE, but I mean, we look at the S&P is trading above 20 PE. So, I mean, airlines are more volatile business, so obviously you're not going to get that kind of PE, but I still think it's fairly undervalued. There's lots of room for it to grow in the next few years. They're largely a different business than they were in past decades, so while they're not recession proof, I think I do agree with the executives that they are more recession resilient, and they've built in a lot of buffers. For example, a much larger loyalty program, and that could help quite a bit, to offset some of the negative pressures of recession. Although they're, in a recession, obviously some of that revenue may track down as well. But they did mention a really interesting point, which is that business is in a recession or hasn't fully recovered, and so if they go into recession, there isn't much to cut, from the business travel, because it's essentially still in recovery mode. And that's a good point, because typically in typical recession, the first hit that they take to the business, to the travel industry, is usually the business travel. But they have basically moved the business model to add more leisure premium, and they have done more like ancillary business, like their loyalty program, etc. So, and they've moved into more fuel efficient planes, or cutting down their costs. And so the business has changed significantly from a decade ago. And so, the last wave of bankruptcy, I really do believe that the business is no longer the same, and it would be a mistake just to view them in the same lens. So that said, the key takeaway that I got from the analyst day is this will be the highest EPS or earnings June quarter that will have in history. I mean, that is incredible. I mean, considering how profitable we were in 2019, this is going to be even more profitable than 2019. And so I think that's something that you really need to think about. The highest EPS or earnings in their 100-year history. That's really, really impressive. And understandably so, considering how strong the demand is, and how strong the international tickets are, and considering that domestic tickets have been trending down and to the tune of something, my prediction is something to the 6, 7, 8% range, that they'll still be able to pull out a record-breaking June quarter is pretty impressive. So I think that as an investor, you really need to look into the potential. And I'm not advocating just to run out there and buy the shares, because if you look at the chart, their performance in recent years. There's a lot of pullbacks, and so and they haven't done any share buyback and have not committed to any share buyback. So therefore, when the sheriff's out of town and not there to put a floor on the prices, I think as an investor you should be a little cautious and assess your risk appetite. That said, I still believe there's incredible upside opportunity on this stock, and if they do deliver the earnings that they are talking about in the next few years, that share price can start to jump pretty quickly. And so that said, anytime there's a severe pullback, it always makes any investor nervous. So please take caution, when you're looking into the stock, even if there's a significant upside. And I think that they are setting up to return back to investment grade. In 2019, they were investment grade. I will make the argument, and this is my viewpoint, but I will make the argument that their balance sheet today, and I believe I heard somewhere one of the executives mentioning that their balance sheet is as strong, if not stronger, than what it was in 2019. I think that if it's true that their balance sheet is comparably as strong as 2019, and they were investment grade in 19, then they can't be that far from the doorstep of an investment grade. So my prediction, and this is my prediction, but my prediction is that they will return to investment grade within a year. And so that is something that you need to keep in mind, when you're looking at this airline. Is you'll have to assess for yourself, when the likelihood of them returning back to investment grade. But at the rate of debt pay down that they've been doing, and at the leverage that they have leverage that looks like it's even better than 2019. So I wouldn't be surprised if they're investment grade by the end of the year or sometime during the middle of next year. So in any case, I think just be cautious and assess your risk appetite, and we'll see what this earnings how this earning will unfold. And so if you enjoy this video, I'm going to be following up with future videos on how Delta has been dominating, and I'll probably speak about some of the different aspects of their advantages and etc., and try to break that down a little bit more, so that I can share with you the path that they've been on. It's fascinating times for the airlines, and stay tuned. Forgot I wanted to make a prediction on the APS. I mean, that's one of the reason why I put this video together. And my prediction for this June quarter, and I think I mentioned it before in an early video, but they have the guidance for June quarter between 2 and 225 per share. I think the executive team sort of sandbagged that a little bit. And if you take a look at the analyst community, they've done some sandbagging of the sandbagger as well. And I think that their earnings will actually come north of 225. I believe as far, probably as high as in the 270 range. And I think that Q3 would also be north of $2 per share as well. And these are my predictions. So again, please be cautious, because these are, after all, predictions. So I hope to hear some of your feedback, and let's see how it shakes out in the next few days when they release their earnings. And in any case, that's it for me, and thank you for listening to my video.